Hello, and thank you for tuning in to the Home and Finance Show. I'm Janis Bradley, broker-owner of JB Real Estate Consultants, and joining me is my co-host,
Diana Rice-Wilkerson, lender with Fairway Independent Mortgage.
We are your seasoned, trusted advisors, committed to personally navigating you through the home and buying process. The show is designed to provide you with current and relevant information about different aspects of home buying, home selling, and lending, and refinancing, so that you are knowledgeable when making decisions for you and your family. You can also hear us on Saturdays on Radio 1, 1310, 92.7, and 95.1 FM. That said, if you are in the market to buy, build, or refinance, we'd love to represent you. You may reach us at the contact information below. Now on with the show. Hey, Diana.
Hello, Janis Bradley.
What's going on?
Well, Gail Barnes is going on today.
Yes. That's the truth. Yes, as you know, we always say, when we have the guests, we have the best. And if you've been hanging out with Home and Finance for probably over 20 years now, you have heard of this young lady before, certainly on our radio show, and we are honored to have her actually in the studio because she is hard to grab a hold of, and this is her season. But we know Gail as the expert of all experts when it comes to taxes. That's business taxes, that's corporate taxes, that's individual taxes, that's I had customers who would not, they wanted to build a house and they couldn't because we needed their tax returns, and I think the customer had not filed returns in forever, and so he put it off, and I said, hey, I've got a tax professional. Yes.
If I go with you to her office, will you go? Because that was, I know she works miracles, and he said yes, and he and his wife met me there. We had never met, but we had been on the phone, and guess what? Gail worked the miracle. And
Absolutely.
Guess what? He built his house and he's in his home. So that's just one, I'm sure, of many examples when it comes to how awesome she is. But Gail, thank you so much for coming in today. We truly appreciate it. We've got to start off with you telling folks who you are and what you do.
Exactly, because you've got some titles behind your name here. So we'd like you to share. Seriously, they're real titles. So tell them who you is when they say who you are.
Well, thanks, Diane, for all the compliments you made. My name is Gail Barnes, of course. I'm a CPA. I have an MBA, and I am a licensed registered rep. Now, with my CPA, I'm a certified public accountant, and I could do audits. I could do compilations and reviews for clients so they can get to their banks or their board of directors. And what they are is usually, I'm certified to read them and put them together so people could know that they are accurate. And also, like I said, I got my MBA, which I mainly use when doing my business. It helped me feel better about doing the business. When I got finished, I said, I can do this. And then I'm a registered rep where I do investments for my clients, and usually people are retired, close to retirement, or other people who have financial goals, and we do it in a tax-efficient way. So that's a little about me.
And the other thing that she does, we know the inside scoop. Anytime the IRS is putting on any type of educational training situations, she is in the room.
She's there.
One of the things we love and admire about Gail, with such a complicated topic, and it's intimidating and everything else, when she's your partner with your taxes and finances, you can just breathe easily. She knows how to navigate that world. So I'm not going to say any more because we only have 22 minutes left, and we're going to let Gail talk to us about some things.
I don't know where to start. So I guess one of the questions that with the pandemic, there was an increase with the child tax credit in 2021. Will parents get the same amount for 2022?
No, that is the issue that's going on right now. People are coming in and they're getting their taxes done, and they're saying, you made a mistake. My refund is not high enough. But what has happened is, during the pandemic, they raised the credit so people can get money to get through the pandemic. But they went back to the 2020 tax laws, and now when you were getting $3,000 last year, this year you're only going to get $2,000. But one thing people need to realize, though, they still made that tax a refundable credit, which it wasn't before. And what that means is, even if you have zero tax liability, you owe no taxes, you can at least get $1,500, what they call refundable tax credit, if you have dependents.
Okay, that's good. Wow, 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 wow. So people typically who normally would get the really, really big refunds, they may see an adjustment.
Yeah, we'll see adjustment.
Okay.
And another thing they adjusted too was last year, if you were under 18, you could get it. Okay, if you were dependent. Now it's back to 17. You got to be, if you're under 17, you can get it. So there's a year they cut off as well.
Okay, okay. What changed with the earned income credit?
Now, earned income credit is for low-income people whose income is low and they have dependents. And last year, and I'll be honest with you, shocked me a little because I thought I was on it, but they changed that earned income credit for people who do not have children but have low income and they can get earned income. It used to be you could get it if you were 25, at least 25 and up to 65. And last year, they changed it and they let it go down to 19 years old. And then they had no limit on your age, or how old you were. Well, they went back to you have to be 25 and you can't be over 65 to get it. So I could see clients coming in, they were really shocked, oh, I get a refund. But this year, it won't be that.
So let me,
okay.
So I want to just kind of paint an example because I want to make sure we all understand. Let's say I am 26, and let's say I made $22,000 last year. And let's say my employer didn't take out any tax, any federal tax. When I file my taxes, I can still get this credit?
Well, you see, you're 22?
I'm 26.
26.
Yeah. I stumbled up even over my age. It was such a lie because I'm so far away from that. But I'm pretending to be 26.
Okay, you're 26. It all depends. How did you get the wages? Did you get them as wages with a W-2?
Yes, wages with the W-2.
Then you can do it if you're 26.
Okay.
Now, if you were under 25, you couldn't be eligible for it.
So and what am I getting? A refund?
Refund.
I'm getting a refund, and it's falling under earned income credit.
Yes.
Okay.
It's one of the credits they give out.
Okay. Okay. But the age has changed now.
It's the age part that's changed. They wouldn't, last year they lowered the age so more people could get it.
So they put a lot of money into.
And when I say age, I'm talking about people who were single, because people who have children.
Right.
They would get earned income credit.
Anyway.
Okay.
It's the ones that people don't realize. You can be single and get earned income credit, but you had to be within a certain age.
Okay.
And that's the people.
Was that the 20-something to 60-something? Okay. So what do you know right off the top of your head? What kind of income you'd be talking about?
I have it not quite off my head, but around 20-something is about right. But I don't have it right on my head right.
Just wondered. Yeah. So what are the changes to the tax law that are effective this year and clients' refunds? How is that being affected?
Say that again, I'm sorry.
What are the changes to the tax law that are effective this year?
Oh, okay.
And clients' refunds. How does it affect, I guess, by the...
Okay, this not as many changes as it went back to 2020. Okay. And so that's what's hurting a lot of people, and like child tax credit. But one thing I think people need to be aware of, the advanced tax credit. Advanced tax credit means is you can have $0 in certain things, you can get advanced tax credit. Child tax credit, earned income credit, education credit. So like if you were filing and say, I don't have that much income, so I'm not gonna file.
Right.
You may wanna file so that you can get at least the advanced credit. And advanced tax credit is like $1,500. That's the max you can get. So for instance, say you were a grandparent and had some income, but not a lot. It has to be income, $2,500. And generally, you wouldn't file because your standard deduction would make you be zero, and you wouldn't have to file. But if you have dependents, you want to file so you can get that advanced tax credit.
Yes, and what grandparents?
Or even just regular, anyone who has dependents, at least they made $2,500, they can get. And education too was another one. People are full-time students. They could get credit because advanced tax credit for education.
Right.
And if they file, And though they don't normally have to file, they need to file for that credit.
So it sounds like the best practice is always file, for the most part.
If you have dependents or if you are a student.
In these categories.
In these categories.
Okay.
So what is this child's changes in meals for self-employed clients?
People were so excited. Oh, I can write off 100% of my meals now.
That was for, gotcha.
Well, they changed that. They only had it for 21 and 22. So you can do it again this year. Then next year you will not be. You had to go back to the 50%.
Period.
Yes.
Yeah.
So these changes have really affected people.
You know, and even on my job, so with a self-employed borrower, you know, let's say they had meals listed as an expense. So that's been deducted, and now we have this net income. So I had a customer the other day where the underwriter deducted more money from that for the meals because the only amount the borrower could show was 50% of the expense. Therefore, the underwriter says this net income did not reflect the total expense. And so she deducted the other 50% off of that income. So it was a total 100%.
100%.
Yes, for loan purposes. Yeah. I'm like, why are you deducting this twice?
I know that's
because she gave him the 100%.
She took 100%, but it reduced his income, right?
But become 23, she won't be able to do that.
Period. Will it be back to 100?
It'll be back to 50%.
Okay,
so right now, that's why she did it, because you can do 100%.
Got you. Okay. All right.
So changes that are retired that require minimum distribution, that's a mouthful.
That's okay.
Who does that affect?
RMD means required minimum distribution.
Oh.
If you were holding money back, say you had a 401, and you put money in that 401, you didn't pay taxes on it.
Right.
So I could say, okay, we'll let you do this for a minute, okay? And then you leave and you roll it over. You still haven't paid taxes. But when you get to a certain age, I'm gonna say, we're gonna require you to take some of that money out and start giving us our taxes. Basically, what it's saying.
And what's that age, Gail?
Well, now it is 73.
It's 73.
Starting this year, it's gonna be 73. It was 72 last year.
Yeah.
It used to be 70 and a half.
Okay.
And then they're gonna go up, I think in 2025, something like that, to 75.
Oh, okay.
So they keep raising it, and it helps people to raise it because some of them don't need that requirement.
That's right. That's right.
You know, but
that's
they're
exactly
required
right.
to take it only because that's the law.
Okay. So the further they put it out there, though, the better it is for the older people that are still working.
Yeah.
Okay, because they...
Or not necessarily working, just even if you're retired. If you have what they call qualified money in an account.
Yeah.
And by the time you retire, it's using the IRA.
Yeah.
They want you to start taking that money out and getting taxed on it.
Okay. But now, that's effective if you're turning 73.
Yes, this year, yeah.
This year it's 73. Okay, good job.
So when somebody calls you over the phone, and it may not be you, you know, your assistant or what have you. So are you asking questions over the phone, or are you just making, you know, before they come in, or are you actually just going ahead and setting the appointment for them?
It depends.
Okay.
Many of my clients are repeat clients.
Yes, they're going to be.
I was going to say, don't fire us, please.
Most of them are repeat clients, so, you know, they'll call us and make me an appointment. But now we've always had it, but it's better this year, a calendar with a link you can go make your own appointment.
Yes.
Okay. And so many of them are making their appointments that way. Then once they make the appointment to come in, then we talk to them. People who are repeat clients, you can come in and bring your stuff, or you can do it virtual. We got a secure drawer or portal where you can scan your documents in, and we can meet with you through Zoom. So everyone doesn't have to come in, but some people want to.
That's Zoom.
New clients, I'm asking, at least do a Zoom meeting, because I want to see what you had in the past. I want to do a good interview on you so we can make sure we're getting everything.
Right.
So then they usually, some of them come in, but we can even do Zoom with them, but we definitely want to meet them. But there's other repeat clients I know them real well. They say, I'm just dropping this off.
Right, that would be me. That would be, I'm the drop-off person.
Yeah.
Gil, how prepared, okay, say I am brand new, I've got a meeting with you. How do I know what to bring?
See, what I asked them again, I'm asking them, if you're very new, I at least want 1 year, like 2 years of your old tax return.
Gotcha.
I tell bring in the documents you have, your tax documents that you've been accumulating. Because many people, they come to me, but it's not the first time doing taxes.
Right.
So I said, bring in all your tax documents. Then I go through the interview with you, ask you different questions, making sure things are the same and things have changed. So that's the only way. But sometimes we can send out organizers, but a lot of times people don't want to fill them out.
That's right.
So, but if I interview you, then I'm going to find out the information.
Right. Hey, they don't want to fill out their mortgage application.
Never mind.
And I think people generally feel, I don't know, credit reports and taxes are two things that I just feel in general we need to become much more connected to. You know, we need to know more about it. And I know you're a teacher, not professionally a teacher, but you don't mind explaining. You'll answer every question, which is wonderful. Is there a penalty for those who still don't have health care?
No.
Okay.
It was in 2019, I think, where they stopped the mandate.
Okay.
So you're not required to have health insurance, so
That
you
was
won't
so
get
crazy. Wow, that was really different.
Yeah.
When that happened. I wondered about that.
Yeah, but you don't have to. People still bringing me tax. They're with their health insurance tax papers, but I don't really need them. But I look at them sometimes because it does show me dependents they have, and make sure that we're showing the right dependents on their tax returns.
Gil, it used to be where you could go downtown and you could go inside the IRS building. You could just go down and go in. That doesn't exist anymore?
You know, I'm not sure if they have opened it up. I heard they are going to open it up.
Okay.
But during the pandemic, no, you couldn't go.
Right.
But then I
right.
was hearing lately that they may open up for appointments for people
For
to come.
appointments only, though. It sounds like it's gone is the walk-in.
The walk-in.
Business.
Yeah, that's what I'm
everywhere.
hearing too. You know,
Yeah.
or even getting them, period.
Yeah.
Yeah.
But
Right.
you know, you see, they're getting more. You hear about them hiring all these agents and whatever, and it was very difficult to even get through the phone, even with my priority line.
Yeah.
Now I can call and get to it really quick. So I'm thinking
Great.
things will change as
Yeah.
they start hiring more people to help out too.
There are some of these questions that thank you for sharing that we need to talk about. How does the Secure Act, was it 2.0, affect individuals?
Okay, that was one of them, was the RMD, required minimum distribution, but also some things that I thought was really nice. The new one, they just put a new one out, was like, say if you had a 529 plan for your child.
Which is the college plan?
The college savings plan
Okay.
for them to go to college. They don't go. Or they get a full ride and don't need it.
Right.
You have to use that money for college expenses. You know, you could transfer it to someone else, but just say you didn't have that, you just have that money sitting in there. They're allowing people now to take the 529 money that they didn't use and put it towards the student loan.
Oh, great.
Now that makes sense.
Yes.
And they're also allowing people to open up a Roth IRA with it,
Okay.
which I thought was really good. Another thing they came out with too is like, and you hear people doing, they taking money out of their 401. They're under 59 and a half. They get a 10% penalty. So now they're letting, if it's an emergency and you can prove it was an emergency, they're going to eliminate the 10% penalty on you for that.
Well, how does it work with those clients that we have that take money out of the 401k and they're paying it back, but is it just when they're not paying it back that they get the penalty? But is there any kind of penalty if they're not paying it back, or maybe not paying back enough? I don't know. I guess they.
Well, this is not a penalty if you make it a loan. That's what they call a loan. When they take it out of their 401 and they taking it as a loan. But if they take a distribution and not paying it back, and you're under 59 and a half, you get penalized for 10%.
Right.
And there's some situations where you can, you know, will not, like first home. You can take money out in the first home.
Right.
A few things like that, but most times they're going to get penalized.
And what changes have been made for moving expenses when it comes to your taxes?
Yeah, I have them come in. Gail, I moved. Can I take these moving expenses? I came from California to Indianapolis. But they eliminated that. You cannot take moving expenses.
No.
Only
I didn't
people
know.
that can take it is service people.
Okay.
Ah.
Okay.
And then another thing, you know, when the company would pay for it, and
Right.
you didn't have to pay taxes on that. Now they're making the company include their moving expenses they pay for you in your wages.
Okay.
And yours, and they've paid for it.
Well, they pay for it, but then it's
Right.
wages.
It's
like
wages.
income.
Wages. That's
in
I
the
get you.
W-2. Jesus.
Yeah. Oh, that would hurt my head.
But that's another one they have.
So they're going to be collecting taxes on that. Oh wow, that's heavy duty.
Mm-hmm.
That is. Talk to me about what is deductible when it comes to mortgage interest now, because I've heard some people I think are giving out bad advice. I think they're still saying mortgage interest is deductible, but I didn't think that it was automatically deductible anymore.
Okay, this is how it works. It is deductible.
Okay.
Mm-hmm. Legally, it's deductible. But you got to beat that standard deduction
First. Right. Was that always the way it was, or before it was a separate deduction?
No, what it was.
But share the listening audience what you're talking about for standard deduction too,
Okay,
so they can understand.
everyone gets a standard deduction that they got to, get to subtract off their income, come down to taxable income.
Right.
A few years back, they doubled the standard deduction.
Okay.
And they eliminated exemptions.
That's right.
When they doubled that standard deduction, then that means you have to have a whole lot of stuff to itemize to be able to itemize. And most people don't qualify.
Right.
You have a few people when they do a lot of contributions, because you had taxes, you have your mortgage interest, contribution, all those would make it up, sales tax, but most people can't do it. The people that do it most of the time are usually single people, because their standard deduction is lower than a married couple.
Right.
So that's why they say it's not, don't even worry about bringing it, because it's not going to be deductible. But remember, in Indiana, we're allowed to deduct property taxes on your state. So you still want to bring the property taxes from your mortgage statement, so people can at least deduct that from your state.
So has the closing cost gone away where the client can claim their closing cost?
It all again, if it's on that 1098, then yes, but do you have enough
for the standard?
That's the standard.
Now, what about the non-reimbursable employer expenses? Is that back in, or is that still out?
That's another one. That act they did a couple of years ago.
Yes.
And I had a lot of people. They had, they worked for their company, but they had a lot of extra expenses, mileage, things like that. Even in their house, they were writing it off.
Yeah.
And preachers, oh my goodness.
Yeah.
They were as salespeople.
Right.
They had a lot of extra expenses that they didn't get reimbursed for. They eliminated that, and they have not bought it back. It's only for, again, service people.
Yeah.
Say that again now.
It's only for the service guys, people in the service.
Right.
Or women, I say guys. But it's not for like a salesperson, like you working for your job.
Exactly.
Yes, and tell me about what I can't write off now.
You cannot write your mileage.
Well, you're self-employed.
Oh, that's right. I got you.
These were people who were employed.
W-2 wages.
Because I probably almost need to get out of the way, because I just say that only because of the fact that you and your self-employed people trying to get them financed, and I know you've got probably a one line, hotline for Diana, but Diana, just I had a question, but I can't remember what it was. Just share with them, what do you run into mostly? What are you running into mostly?
One of the things I run into is false businesses on tax returns. Actually, a customer, great scores, great income, and when we're using the first-time homebuyer program, then we've got to get their tax returns. And then the tax returns, if it brings in a business and a business loss, we're typically dead in the water. So I'm asking this guy about this business. I can't even remember what kind of business it was. But I'm asking him, and he said, Diana, I do not have a business. He said, I had a guy at my job who said he could get me a nice refund if he did my taxes. And that's what he did, and he claimed this business, right? So he got a nice refund. So what that did for my customer is, I said, you're either looking at waiting until you do 2022 taxes and do not claim any business. We're going to probably ask about the 2021, but we just say business no longer exists. Or you're going to have to maybe do amended return. And he said, I was told that if I did an amended return, that could draw some question. And I said, I think you told me the same thing one time. I said it possibly could. So I went into these bogus businesses, and you guys, you're responsible for your own return. Is that correct? Even though you might have let somebody else complete it, you're still responsible for what they reported, right?
Okay, you be careful who you go to.
Mm-hmm.
Right.
Now, like I'm licensed to work with the IRS, okay?
Right.
Lawyers, CPAs, enrolled agents. So if we were to do that, they get caught. Not only are they responsible, we are too.
Right.
But I had a client come in, and I mean, it was bogus, okay? And I said, well, who did it? Well, it was a friend, and I didn't, and they didn't sign it. Because they went, and so if they don't sign it, you're not
It's
responsible.
you.
It's you.
It's
It's
you.
all on you.
We got a very little short window to finish with Gail. We wish it was an hour.
I want to get it in. So the side hustles.
Okay, do the side hustle.
Talk about the side hustles. How does it affect their
It
taxes?
kills the mortgage. I just want you to know. The side hustles kill the mortgage.
I love it. I love it.
I just want you to
I love
know.
it. That's why, again.
Start planning. That's why Janis said, I say, start this process 2 years out so we can actually tell you what not to do with your taxes. Okay.
These side businesses people do on the side, and they want to write off the expenses and help bring down their taxable income. But be careful with that, because if you're showing us a business with no income, that's a red flag.
Right.
If you say have income, not only you're going to pay additional 15% self-employment tax. And then if you get audited, IRS going to ask you, is it really a business or is it a hobby?
I remember you saying
And
that.
if it's a hobby, you can only write up as much as income you received on it.
Okay.
So it's a lot of people doing those.
Okay.
You
Well,
guys,
stay tuned. I'm telling you.
Stay tuned. We got a few seconds. We got just a few seconds. And I just want you to know again that Gail is the go-to.
You need your number.
What is your number?
317-663-8452.
Again.
317-663-8452.
Or call us.
And then I got two little quick things. Can you help your client set up a IRS payment plan?
Sure.
Okay, that's good. And I think that's all I need to say. We have 8 minutes left. Gail, you know we love you. Thank you so much.
And
Thank
we
you
will
for
get you
having
at
me.
the next
And
radio
we will
show.
see you guys next time. Bye-bye.